Good morning, afternoon, or evening, ladies and gentlemen. All in crypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily cryptocurrency market update. And as always, if you are new around here and finding yourself on my channel for the first time today, don't forget to check out that subscribe button because I drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest happening in the crypto space, but also the broader markets. And I really thought, given the price action, what is the best thing for me to possibly talk about in this daily market update? And I think conceptualizing what's happening right now is a good road to go down. And we're going to be starting the video off by looking at the parameters of normality when it comes to the cryptocurrency space and what the market is currently doing in relation to the kind of seasonality, the time period that we're in regards to what part of the year are we in, and also what typically happens after the halvening to kind of maybe normalize a little bit of what's taking place with the cryptocurrency markets. Also, we know there's crossover in regards to the short term following Friday and the information that we've got Friday in regards to unemployment upticking, which is a bad sign, and also, which should be a good sign, but given the context of what the Fed is doing and monetary policy, we also had non-farm payroll, which gives the Fed what's happening is rates cuts are getting priced out the market. Uncertainty is being reintroduced. This is seeing the dollar be strong and it's seen risk get leaned on generally. And of course, crypto is the highest beta, so it's the most volatile kind of class in that category of risk. So we're going to be conceptualizing it all. We're going to be looking, of course, first of all, the Bitcoin 4-year cycle theory. Then we're going to be looking at US PMI cycles, which were also down on the last print, kind of again throwing that uncertainty into markets. But the broader trend, we believe, is now an upward one, not just for US PMIs, but generally for risk, stocks, gold. You know, we've got lots of technical targets and we've done lots of technical work. And I don't think that plan has changed despite what's happening on the short term. And before I dive into everything, because we've got a lot to cover, including looking at Bitcoin on the short term and total too, and looking at the kind of health of them, it's a good opportunity for me to remind people that this is what being a crypto investor is all about: volatility. Everybody wants the explosive upside that the cryptocurrency market offers, but nobody wants to sort of ride the volatility when we're in this kind of period that we're in. Nobody wants to sort of endure the downside, but everybody wants to sort of benefit from the upside. And the only way that you're going to benefit from that upside is being able to endure essentially the volatility that's inherent to the cryptocurrency market. It's a very leveraged space. It's a very small market cap space. But this will change over time. As it gets larger and larger, I think the volatility will reduce, perhaps, although if you look at something like Amazon, it's a very volatile stock, has, in some cases, similar volatility to Bitcoin at times. So a lot to talk about. What we teach here on All in Crypto, and really what we try and impress on people, and the goal for us is to help people understand when we think it's a market to be investing in. So when it's a bull market, and help people understand when we think it's a market to not be investing in. And my assessment generally of the cryptocurrency space is that it's going to do well in the coming years. And certainly, even if you look at the volatility that we've seen, and we're predominantly in altcoins, you know, we could have traded Bitcoin dominance way better given that we were sort of looking at it at 16, 17K. You know, we are still up from when we got into the markets, and I think well positioned in regards to where I believe we're going. And it's important for me to say that, certainly on days like this when everyone's kind of a little bit upset, a little bit panicky. You know, you really notice sentiment change based on price, which is normal. But having that greater understanding of things, which we'll try and do a little bit of in this video, I think is certainly of importance. So a good place for me to start is with the Bitcoin 4-year cycle theory. Now, if you go back, you know, 4 or so years ago to my YouTube, I think Bitcoin was 13K. It was somewhere around here. It might even been less than that. You know, we were experiencing a lot of chop and volatility, but we had this broader plan and vision that ultimately enabled not just me, but hundreds of other people out there to do very well. We had a technical assessment of the market that was a bullish one. We stuck to it despite the sort of short-term volatility that was seen. And we started the channel not long after the sort of, or before the prior halvening. And there was a lot of chop. We went through the whole March 2020 sell and the scare and things like that. And we're experiencing kind of, it doesn't look as volatile on the chart here because this is a log scale chart. You know, if we take it off log, it puts things, I think, into a lot more perspective. But the reason we use a log, certainly when it comes to crypto, is just to quieten the noise down. And typically in and around every single halvening, which also typically falls May, sort of April, June, you know, this prior one was sort of June. They get a little bit earlier in dates. Obviously, this one's November, so you can see why this one probably November. The seasonality to markets, just like there is with everything. Remember, the main markets before that were agricultural ones, which is you plant and then you reap the harvest. It's a similar kind of, it's weird how there's a crossover there with traditional markets, but we can see around every single halvening, there's always a period of chop, consolidation, and certainly after it for the prior 2 cycles, there's been a period of kind of reaccumulation, we'll call it. And the beautiful thing about this halvening cycle is this is the first pre-halvening where Bitcoin's actually gone to new all-time highs. And you should expect that sort of consolidation, sideways action, certainly given that Bitcoin is around its all-time highs. We'll come to the short term in just a second. So I do think this is ultimately going to result to the upside. I think when we assess things more generally, this is US Purchasing Managers Index. Bitcoin 4-year cycle theory perfectly aligns up with this. It also aligns with global liquidity. You can see top for Bitcoin, top for Bitcoin, bottom for Bitcoin, bottom for Bitcoin. We think that, like something coming out of hibernation, it's very sort of the bear market, great analogy here. It's very sort of sluggish, slow, and as it gets going, it sort of starts to come more to life. And we think we're in that stage of coming to life once again for the cryptocurrency market. Certainly the altcoin market, Bitcoin arguably a lot further ahead, as it always does. Bitcoin dominance very much acting in the same manner that it always has. The price in regards to seasonality and kind of the halvening also acting very much in line. So I think you panic when things don't add up, when things don't start to make sense, and there's a different kind of approach that the market is taking. But our overall assessment and what we try and do here on All In Crypto is quieten the noise right down for you guys and highlight when it's a bull and highlight when it's a bear. And in terms of the bull market call, looking at Bitcoin on the 5th of January, which is here, and saying it's time for us to get in. I made that call with my Patreons. You know, many people followed me into that, although we don't advise anybody financially. You know, it was the right call, and I think it's going to continue to be the right call. I think there's a lot more things in our favor than there are going against us. Looking at the kind of macro view which we've done, we can now bring that down into the smaller view in regards to what's currently taking place. And the best place for me to start is what Friday, with the information that we got Friday and what that kind of set in motion. So let's stick to the small term and then we can zoom out on my broader picture of the dollar. You know, this is what the dollar did on Friday. We know we'll pull up the relationship between dollar and risk, but it's good to conceptualize and understand everything. Certainly starting on the big time frames and saying, look, nothing's really out of the ordinary here. This is actually very normal. The emotions that people are feeling when it comes to the markets, and I'm not one of these people that thinks you should be emotionless when it comes to markets. You should just learn to deal with those emotions. The emotions that people are feeling are normal. However, we've been here 1,000,001 times just in the past year or so, and I'm sure we're going to be there into the future. And every time it's sort of resulted in upside continuation since we made that bull call, and I think that's going to continue to be the case. But obviously we had unemployment rising, historic correlation between unemployment at a high, markets at a low, vice versa. So this rising is not a great sign. And then of course had non-farm payrolls at a time when there's fears about inflation. The Fed's not done its job yet, so they're going to keep their kind of foot on the neck of whatever their foot is on the neck of, which is why you saw that dollar strength. We'll look at our sort of macro time view for the dollar, but if we bring up our markets now, what are we doing here? Bitcoin, we'll put the SPY on, we can put gold on, we'll even put the Dow on. You know, you can see that they kind of all, certainly on this rally, sold off. When the dollar started going down, they rallied again. And on this, they've all sort of took a little bit of a turning, if you will. Some doing better than others. Like the stock market's doing better than Bitcoin. But with the uncertainty, Bitcoin's going to be taking the brunt of what's essentially taking place. And that's what you're seeing right now. And I think people always forget, it's all very well and good when you see Bitcoin up 6% on a day, but when it's down 3-4%, everyone's like, oh, wow, this is super risky and you know, whatever else. But you should always understand that that's always been the case. There's nothing different this time. And we're suffering really from short-term kind of uncertainty and a dollar strength. You know, we could put yields on, very also correlated, so on and so forth. probably the 2-year, probably more so, or the 10-year more linked to the dollar, but the 2 years also what interest rates kind of follow. You can see as the dollar rolled, so on and so forth. So it's a big dollar story. My broad thesis on the dollar, really going to confuse everyone now, is that it's going to come down to this lower band of a channel we've been in since 2008. I think the dollar's coming down here eventually, and that's going to see risk do well. It confirms what we're looking at in regards to broader bull market. You know, we've got targets for Bitcoin. We've got targets for the total 2 still in play, by the way, ladies and gentlemen. Just to really take it, I don't really share this too much on YouTube, but it's something that I dive into in regards to Patreons. We've got thesis on stable coins, not just USDT, USDC. Where's dominance? So on and so forth. And when something walks, talks, and quacks like a duck, it's a duck. We've looked at the macro context. We're looking now. We've kind of gone a little bit off here. We also have a view on crypto index funds. All pointing in a very bullish direction, albeit the short-term volatility is exactly that. And when it comes to the cryptocurrency space, everyone's got this idea of perfection when it comes to investing. The best thing you can do is be on the side of the uptrend and out when the bear market hits. And if you can do that as an investor, you don't need to be too fancy. You don't need to listen. Anybody out there that's telling you they perfectly sell all the peaks and troughs within a broader trend, just ask for a pin out. They will not show you one. I promise you that. And if you can find someone that can, please, you know, with proof. Obviously, anyone can say anything when it comes to the cryptocurrency space. The proof's always in the pudding. We still assess this as a bull market and that there's not really too much reason to panic. And we're showing what on the short term is kind of plaguing things. So this was Friday. Fast forward to today. Tomorrow, we've got 10-year bond auctions today. We had some bad news from unemployment in the UK also. So maybe there's a bit of a general thing going on there. Tomorrow's a big one because we've got CPIs and we've got the Fed economic projection and rate decision. Now, if CPIs come out as expected, the same as they were last time, and the dollar's really been going sideways and since we had that first higher print and that uncertainty. Because, okay, inflation's coming down, dollar's coming down, because what's driving the dollar? Well, it's rates. We had this higher print, and then you can see it started to bottom out on the uncertainty. And the dollar is an uncertainty trade. But there's a macro picture on the dollar is that my belief is they're going to continue to deflate it through proliferating it, essentially at a higher degree than other countries are, which is why the Dixie might go down. We're seeing Europe low rates. Already, they've already done that. UK will follow. So I told everyone about that argument I had with the mortgage broker who was telling everyone to fix their rates now. And I'm like, why are you telling people to do that? Do you know where rates are going? He goes, well, no. And I said, well, how are you advising people to fix rates at the highest level they've been in for when rates are expected to come down? Anyway, so the dollar's a massive story. Obviously, tomorrow we've got CPIs. Dollar's been going sideways since. We need the same or lower print. Even the same print, I don't think is great news, but certainly a lower one's going to do well, or see the markets do well. And then, obviously, we've got the FOMC. So this is the big one. It's going to be interesting to watch rate cuts and the pricing of them. Obviously, tomorrow they're not going to cut rates. July, they're likely not going to cut rates. September, by 1%, less than 1%, 0.9, it's probable that they cut rates by 25 basis points. And obviously, November, we're sort of ratcheting things up. I do think they're going to cut rates eventually. I do think Stan Druckenmiller gave us that kind of vote of confidence in regards from going from Nvidia down to small caps, which are a lot more rate sensitive. I'm bullish on housing, bond, crypto, everything. I think that's still a broader trend, and understand that this is just short-term volatility in a very volatile asset class. And if you can conceptualize and understand that and put it in the broader context of things, I really don't think you have anything to worry about. That's just my opinion, not advice. And just personally, I'm still in the crypto space. Has my portfolio fluctuated significantly? I'm right there with you, absolutely. But this is crypto. This is how it works. And I think when people try and apply, if you tried to apply traditional risk management to the cryptocurrency space. There are crossovers and there are risk management that works, certainly from a technical point of view. I mean, like, for example, trading, you only really want to take a 2% round there hit on every trade that you do. Now, there's sizing that's involved. It can be quite hard with leverage in the cryptocurrency space. You can do it. But this notion that people can sell the top and of the peak, not the broader bull market, because I think that's a lot easier to do on a macro view. But the little movements, you're going to get caught out eventually, and I think it's going to be costly. But generally, when we look at the context of the markets and where they're at, we're not seeing anything out of the ordinary. Also, we understand what's going on the short term, what we need to see, what we don't need to see, and understand that the dollar's a big part in this. And ultimately, the broader bull market for risk that we've been very right on is still very much in play, in my opinion. So that's it from me. Hopefully, we've sort of spoken or calmed some people down. I see the same emotions every time the markets sell off, the cryptocurrency markets. Not telling people not to be emotional. What I'm telling people to do is learn to deal with that. If you want to be in the cryptocurrency space, you want that high return, you've got to understand there's a high risk that comes on the back end of it. And there's volatility works both ways, not just to the upside, also the downside. On that note, I'm going to love and leave you to your triumphant Tuesdays. If you've enjoyed the content, like is appreciated, so is a comment, and look forward to seeing you all in the next one. Thanks for watching, guys. See you in the next.